today's financial world, where markets can be unpredictable, wouldn't having a safe, reliable, and profitable investment be nice? Well, that's exactly what we're going to talk about today. However, before we begin, it's essential to note that the content of this video is provided for entertainment purposes only and should not be considered financial advice. Always consult with a qualified financial professional before making investment decisions. Now, back to our topic. Today, we'll delve into the world of Treasury bills, commonly known as T-bills, and explore why they're an excellent choice for short-term investments in September 2023. This investment option is even more enticing because the current interest payout rate on T-bills is over 5%, making them an attractive option for both small and large investors. In this video, we'll explain what T-bills are, how much you can earn with a $100,000 investment annually, and just how impressive the returns are for those who choose to invest $1 million or more. Treasury bills, or T-bills, are a foundational component of the financial market. They're essentially short-term debt securities issued by the U.S. government designed to finance government expenditures. These bills come with varying maturity periods, typically ranging from a few days to 1 year. Despite their simplicity, they play a crucial role in the financial landscape. Investing in T-bills means lending money to the government, and in return, you receive the principal amount along with an interest payment once the T-bill matures. The primary appeal of T-bills lies in their unrivaled safety. They're considered one of the most secure investments globally. This level of security stems from the backing of the U.S. government, which has never defaulted on its obligations. Now, you might wonder why September 2023 is an opportune time to invest in Treasury bills. Well, let us consider the broader economic and financial landscape. Now we find ourselves in a unique situation. Several factors make T-bills particularly attractive in the current environment. First, the prevailing interest rates are a crucial factor. As of September 2023, interest rates on T-bills have surged, offering returns that surpass many other low-risk investment options. Given the uncertain economic climate, these higher interest rates make T-bills an enticing proposition, especially for investors seeking stability and consistent returns. Additionally, inflation rates are a concern for many investors. Inflation erodes the purchasing power of money, making it essential to seek investments that outpace inflation. T-bills have historically proven to be a reliable hedge against inflation, ensuring that your investment retains its value over time. Market volatility is another factor driving investors towards T-bills. The unpredictability of stocks and other riskier assets can be nerve-wracking. In such times, T-bills provide a safe haven where your investment is shielded from market turbulence. This stability is especially appealing to risk-averse investors looking to preserve their capital. Let's get down to the practical details of your potential earnings from T-bills. Imagine you have $100,000 to invest. In this case, you can purchase T-bills with varying maturity periods, but let us consider a 1-year T-bill, given the current interest rate. With an interest rate of over 5%, your $100,000 investment will earn you $5,000 annually. Now, let us explore what happens when you take the scale up a notch. Let's say you have $1 million to invest in T-bills. With the same interest rate of over 5%, your annual earnings would skyrocket to a staggering $50,000. That is $50,000 in profit for a relatively low-risk investment, and it's a compelling reason why larger investors are turning to T-bills in 2023. Now, let us amplify the potential. If you possess $1 million investment, the same 5% yield translates to approximately $50,000 annually, or a remarkable $4,167 per month. Explore the financial power of scaling up your investments with us. Before you jump into investing in T-bills, it is essential to understand how the process works. It's relatively straightforward. You can purchase T-bills through a variety of channels, including banks, brokers, and the U.S. Department of the Treasury's website. When you invest, You're essentially lending money to the government for a specified period. One of the attractive aspects of T-bills is their flexibility in terms of maturity. You can choose the duration that suits your financial goals, whether it's a few days, a few months, or up to a year. Keep in mind that longer maturity T-bills often come with slightly higher interest rates. Once your T-bill matures, you will receive your initial investment, the principal, back, along with the interest earned. It's worth noting that the interest income from T-bills is exempt from state and local income taxes, making them even more appealing from a tax perspective. While T-bills are considered one of the safest investments, it's essential to acknowledge their limitations and potential downsides. One significant factor is the opportunity cost. Since T-bills are low risk, they typically offer lower returns compared to riskier investments like stocks or corporate bonds. As an investor, you must weigh the safety of T-bills against the potentially higher returns from other investments. Another consideration is liquidity. T-bills are liquid, meaning you can easily sell them before they mature. However, selling them prematurely may result in a loss or gain, depending on the prevailing interest rates. It is crucial to assess your liquidity needs and investment horizon before investing in T-bills. Lastly, T-bills are subject to interest rate risk. If market interest rates rise significantly after you purchase T-bills, their market value may decline if you decide to sell them before maturity. However, if you hold them until maturity, you will still receive the full face value. Diversification is a fundamental principle of sound investing. Even if you're considering a substantial investment in T-bills, it's essential to maintain a diversified portfolio. T-bills can play a vital role in this strategy, particularly as a stabilizing element. By combining T-bills with other asset classes like stocks, bonds, and real estate, you can create a well-rounded portfolio that balances risk and reward. T-bills act as a reliable anchor in your portfolio, mitigating potential losses during market downturns while still providing income. Investors often use T-bills as a core component of their fixed income allocation. This approach ensures that you have a stable income stream while reducing overall portfolio volatility. It's a smart strategy for those looking to maintain financial security while participating in the potential growth of other asset classes. In conclusion, Treasury bills, with their security, attractive returns, and flexibility, offer a compelling investment opportunity in September 2023. They are particularly appealing in the current economic climate, characterized by higher interest rates, inflation concerns, and market volatility. However, remember that every investment decision should align with your financial goals, risk tolerance, and time horizon. While T-bills provide safety and stability, they may not be the best choice for everyone. It's advisable to consult with a financial advisor to assess how T-bills fit into your overall investment strategy. As you contemplate your investment options, consider diversifying your portfolio to achieve a healthy balance between risk and return. Treasury bills can be a crucial building block in your investment journey, offering security and peace of mind. If you're intrigued by the potential of T-bills, take the next step and explore how they can enhance your financial future. Your path to financial security could start with a simple decision to invest in Treasury bills.